In this video, I will show you how to determine the selling price of photographs. So, if you happen to be a photographer or someone who works with photographs, in this video, I will teach you how to calculate the price you should sell each of your photos. To do this, we will use this spreadsheet, which is a pricing spreadsheet, available for purchase at the link in the video description. In the case of photographs, to arrive at the pricing per photo, we need to include all the items that will be materials for that photo. So we put in photo paper, we put in an envelope, we put in all the items you can see here in column D, into a specific field in the spreadsheet, and also how many of each item we will use. However, to reach this point, we first need to establish all the cost structure that you, as a photographer or someone who works with photography, have. And this structure is not necessarily related to the products, the materials that will make up the photo. I am talking about fixed costs and variable costs that need to be included in the pricing. As fixed costs, we have, for example, salaries, maintenance fees, internet, and all those items that are fixed, regardless of whether you sell one photograph or 1,000 photographs in a month. So, taking into account that these are fixed costs, you will enter the name of the cost here along with its monthly quantity. Additionally, it is important that you enter your monthly revenue. That is, how much you sell per month, so that the spreadsheet can calculate how much should be included in the final selling price to offset the fixed costs you are seeing here. In addition to fixed costs, we have variable costs, which are those costs that will increase as you sell more photographs and are a percentage of the revenue, such as commissions, transaction fees, credit card fees, and so on. For example, if you sell for $100, a percentage of that $100 will always be taken, consistently the same percentage. With this data entered, the spreadsheet can calculate the total variable costs that will also be included in the pricing. And finally, we have the materials, meaning that here you should enter everything you will use to compose your product and that you acquire from someone. These are production materials. In this case, I include, for example, photo paper. I include an envelope. I include all the items that I will use to take my photograph. And if you have other items or do not have one that is on the list, you should include it in this list. Don't forget that in this video, we are only dealing with an example. After entering the name in the first column, you will enter the reference quantity in the next column, and then the reference price. What are these two columns? Here you will enter the price you find for this when you go to buy it. For example, photo paper. I spend $150 for 50 units. So there is a package of 50 units, and to buy it, I spend $150. You will then enter in the quantity reference 50, which is 50 units, and in the price reference, you will enter 150, which is $150, to acquire this package of 50 units. You will do this for all the materials, all the products that you regularly purchase to assemble your product, in this case, the photograph, which you should enter into this table. Once you have done all of this, that is, entered the fixed costs, entered the variable costs, and entered the materials, you should come here to the tab for Price with Unknown Cost, which is the tab you are seeing on the screen. In this tab, you will enter the name of the item you registered in the materials in this item name column by selecting the name from this drop-down and also the quantity of this item that will be used to make this product. In this case, I will use, for example, 10 photo papers. Then I will put all the items here, and with that, the spreadsheet will already have an estimate of production costs for you. Note that in this case, we are still not talking about our final selling price. Then you should enter another piece of information, which is the desired profit margin. In this case, the desired profit margin is how much profit you will have left after you sell. So, for example, if you work with a profit margin of 30%, it means that if during the month you sold $1,000, for instance, you will have a profit of 30%. 30% of $1,000 is $300. So you will set the price in such a way that you already know your profit margin. In the end, you don't need to spend the whole month figuring out how much profit you will have. The desired profit margin, as a reference for calculating the price, allows you to know how much profit you will have, even before the sale. And then, finally, you should enter the information on how many units this batch produces. In other words, you have entered various materials here. How many photographs will everything you entered here yield? In this case, I will put 10 photographs, and there we already have our selling price. How do we reach the selling price using this spreadsheet? The selling price will be down here, in this case, $24 per photograph. And how do I arrive at this value? We have the allocation of fixed costs, variable costs, the profit margin, the markup, and with that, we can arrive at the selling price of $24. Once I know the price, I want to understand how I can determine my profit from that selling price. And here on the side, you have the entire sales results statement. You will sell for $24. Here it is. You will incur as variable costs those costs you included, which are the percentages of 3, 5, and 3 that we had already included here, all the variable costs, and they total 2.64. Then, as fixed costs, you will incur an additional 6.81. Why? Because this is the amount that will be allocated in your sales, so that when you close the month, you have exactly this amount of fixed costs to cover all the fixed costs of your business. In addition, the assembly cost of the product, that is, the photographs, is 7.35 Brazilian reals, which totals 16.80 Brazilian reals. In the end, if you sell for 24 Brazilian reals and had a cost of 16.80 Brazilian reals, it means you have 7.20 Brazilian reals left. This applies to pricing with a 30% profit margin. If you change it to 20 Brazilian reals, the price will change. For 35 Brazilian reals, the price will change. Each value you enter here will alter your selling price. It is also worth noting that in this case, the price is a bit high because you have a very intense allocation of fixed costs. So in this example, it would be worth taking a look at your fixed costs and understanding what you can optimize to achieve better results. With this, the spreadsheet can easily price the selling price of your photograph. You will go through this process only once, and then you will only update the values when your costs change. If you happen to change any of the values here, or the cost of materials, you can come in, make the changes. The pricing will automatically recalculate. You should do this work only once, and with that, you will have a secure and reliable price for your work, ensuring profit and not having to worry at the end of the month about whether you will make a profit or not, because in the end, you set up all your pricing so that your photography operation actually generates profit. So, as I mentioned, this spreadsheet helps you calculate the selling price in a very reliable way and is available for purchase at the link in the video description. Don't miss the opportunity to have a very rich material helping you to price your photography work correctly. We'll see each other around, and take care.